Hey, Greg, I appreciate you taking time out of your busy schedule today to answer some questions in regards to the net lease market so far in 2018. So, what type of tenants have you been working with here in the last 6 to 12 months?
In the last 6 to 12 months, we've primarily been working on Dollar General, Family Dollar, and Fred's. We've sold a few, mostly Dollar Generals, but we've sold a few Family Dollar and Fred's as well.
Okay, and what geographical region are these deals in?
Definitely the Southeast, North Carolina, South Carolina, Georgia, Florida, Louisiana, and Mississippi. Southeast primarily.
All right, and where are cap rates trading at today?
Well, that's kind of a loaded question. I'd say it's a trifurcation. You have the brand new triple nets or the newer triple nets with 13 years or more in strong locations with good demographics, high population, good average income, upgraded construction. Those are trading in the low to mid sixes still, sometimes in the upper sixes. Any 15-year triple or newer triple net in tertiary markets, maybe in the 6.75 to 7.25 range. And then the double nets with 5 years, 5 to 8 years remaining in different locations. They're trading the 8.25 range up to 10, depending on the lease term remaining, the building condition, and location. So that's kind of what we're seeing in the marketplace on cap rates.
All right, and has the increase in interest rate had an impact on cap rates and or sales so far?
I'd say a little bit. We're probably 75 basis points up from where we were a year ago. I think interest rates started to creep up in September of last year. So someone that was a high loan to value, someone putting 20 to 25% down is impacted by that interest rate because the cap rates definitely have not matched that in tandem. So that type of buyer may be sidelined right now waiting for cap rates or interest rates to subside. So we're seeing a little bit of an impact, I think, for sure.
Okay, now what is the profile of the buyers you're working with today?
Most buyers are 1031 buyers trading out of something, trading out of a more management intensive tenant that is not a long-term guarantee with a corporate credit. And then there, of course, is the yield buyer that's always actively looking to add to their portfolio. But primarily 1031 buyers.
And the profile for the sellers?
Sellers are either your merchant developers or builders that have relationships with the tenant, and or second-gen owners that either are looking to trade up and improve their portfolio, or motivated by what I call the 5 Ds. That would be death, disability, divorce, disaster, or debt.
Okay, so to wrap things up, how would you summarize or describe the current market conditions thus far in 2018?
I'd say the market specific to what we've been doing is slowing with bursts of activity.
Awesome. Well, I appreciate you taking your time out today, Greg, to summarize the market conditions so far in 2018. Hope you have a wonderful rest of the day.
You too. Thank you.